The NCLT on its part has directed for Reliance Retail to get approval from its shareholders, to get approval from its creditors, both secured as well as unsecured. Subsequently, there is also a direction from the NCLT to give a clear list of any pending dues in terms of IBC.
Okay, Ashmit, sorry, cutting you off there. Apologies, but we're running into market opening. Got the gist of it. Thank you for that update. That's an important one. As the restructuring gets underway with respect to Reliance Retail and the consumer businesses. There's the bell, and the stock you need to look out for is Trent. It's down 8% straight away. The market's up. Market's actually opened higher. It's opened better than what the implied open was indicating. Nifty is about 10-11 points up, but the mid-cap index is already flashing red, so it is slightly volatile. Like I said, let's straight away flash Trent, and Mangalam highlighted this earlier as well. What the issues here are. The company has spoken about 20% growth in Q1. Their own, steady state guidance is 25% on an ongoing basis, but they've grown 20%, and that disappointment is written all over the stock. We'll go back to this in just a second, but that's your big headline. But otherwise, the market's managing about a 25-point gain. So let's see what's pulling it up. Bajaj Finance, like Gaurav told us, numbers are looking good, about 25% growth. Market likes that. Stocks about 2.5% on the higher side. We're seeing some move on a BEL. Need to watch out for some of these defense stocks as well. Like I said, over 1 lakh crores of proposals approved by the Defense Acquisition Council. BEL is already up and about. Wipro, Bharti Airtel, Bajaj Finserv. These are some of the other early winners. HDFC Bank is managing a 0.5% gain. But then it's getting really quiet. Reliance, for what it's worth, is adding 3 rupees. Some total of 3 rupees. So it's not too much of a contributor. Markets holding on to the green just by the, hanging by a thread, so to speak. On the flip side, you've got a M&M, Tata Steel, Tech Mahindra. These are some of the names on the downside, only 7 points higher. It is volatile. It's not a clean sweep. So the optimism on Wall Street hasn't quite translated to the Lal Street just yet.
Well, on the way down, by the way, it's the capital marketplace. So clearly this Jane Street's, the interim order on Jane Street impounding gains to the tune of 5,000 crore is hitting some of the capital marketplace. So pull up an Angel One, straight away 5.5% lower on that. BSE is open with a cut of about 4.5%. A Motilal Oswal, CDSL. So the entire capital market complex today is under pressure. The street fears that liquidity will get impacted, market making will get impacted, and that is hurting sentiment there. Trent, of course, is the big loser. Outside of that, on the way down, you also have cuts coming through on Bank of Baroda, where the street is a bit disappointed with the provisional updates. That stock is open with a cut of about 0.5%. On the way up, as a sector, it's the defense names. So Paras Defense, Bharat Dynamics, BEL, that's the complex which is higher today on the back of the Defense Acquisition Council clearing orders to the tune of 1 lakh crore rupees. Marico has started with strength after the volumes hit a multi-quarter high, 3.5% up on that. IEX has a bit of a gain going for itself, and some of the other big movers include a Sapphire that's up nearly 4.5%. A few other NBFCs, Suryodaya Small Finance Bank, Credit Access Grameen, also up and about. But on the whole, very, very flat on the benchmark indices. Nifty Sensex holding up with a mild positive buys, mid caps unchanged.
Flat on the benchmark indices. We do have, the advanced decline pretty much at an even keel early in the day so far. Metal stocks have taken a knockdown as well at the open. So we have Tata Steel, which is about 1% lower. And at the same time, a large part of the weakness in the capital marketplace could also be on account of the update that has come in for the month of June from Angel One, where the gross client acquisition is actually down 41%. The number of orders themselves have declined by about 32%. So, yes, there is that cloud of the Jane Street thing, but at the same time, fundamentally as well, their update for the month of June hasn't been very good. Speaking about weak updates, definitely has to be Trent. The stock had seen a rally all the way up from 4,500 to close to 6,000 on hopes that, growth will return at some point and valuations are getting comfortable, but growth hasn't returned. And in light of that, valuations also seemed a lot higher. I'd like to see what Avenue Supermarts does, because if the company or the quality of Trent is growing just at 20%, yesterday Avenue Supermarts was down 4% on account of a 16% growth. So will Street give a longer rope to Avenue Supermarts right now or not? is something that I'll be watching out for through the course of the day. Marico, 4% higher on the back of 20% growth. That definitely is your stock of the day on the way up. We're also seeing some traction on, a couple of these jewelry companies. So they are doing well. We are awaiting, updates coming in from both Kalyan as well as Titan. And I also watch out for Dabur as well. If Marico is growing well, will Dabur continue to underperform the industry as it has, or will that also get its act together? The street is betting on perhaps it may see some improvement from here.
Marico has finally put it out there. They're saying that, yes, we are on track to perhaps finally getting back to double-digit growth for the year as a whole, right?
For Marico, they've been saying that all of last year as well and this year. And Marico has gone ahead and, delivered that too.
Yeah.
So from a stock standpoint, Marico has seen a lot more in terms of re-rating. And it's done well because their volumes have outpaced the industry for the last 3 or 4 quarters. The only problem was the margins, largely because of higher input prices. But here as well, the commentary is positive. They're saying that things will improve in the second half of this year.
Well, it's really interesting. You put 2 stocks today, Marico on one side and Trent on the other side, both from the consumer space, but very different dynamics, different market positioning, leading to the...
Both from the consumer space and both growing at 20%, mind you. So it's just a valuation. Marico's 20%, street likes 4% higher. Trent's 20%, street does not like, the stock down 8%.
It's positioning, it's expectations, it's valuations, all of that.
But as someone was pointing out, it's also Trent's growth rates have been decelerating, right? I'm just going back over the last 4 quarters, 29% in the prior quarter, 37% before that, 40% before that, and 57%.
Yeah, so which is why we saw the derating as well.
You've seen that derating.
Mark, the stock went down to 4,500. From there, it saw an improvement because the street believed that there could be some improvement. And the company themselves said that it can grow at 25%. So the street was adjusting itself to the new normal of 25%.
25%. Now it's 20%.
But it's 1 quarter, you don't know. And they say one swallow doesn't make a summer. So let's see. Actually, let's take this debate forward with Manish Gunwani, head of equity at Bandhan AMC. Manish, good morning. Thank you for joining in. It's a very spirited Friday morning here in our studios because we have the big Jane Street news and all these earnings updates coming through. So fair bit of excitement. But actually, let's start with the consumer debate and what we are seeing play out. A lot of participants in the market want to pivot back towards consumer stocks because they've not done too well. But you need hard evidence that growth is coming back. What's your sense? Are you liking the space? What's the positioning here? And what kind of consumer companies would you prefer, if at all?
So I think the macro is positive. If you take a medium-term perspective, I think multiple things are happening. One is the tax cuts. 2 is, I think, interest rates coming down. So EMIs coming down will help consumption. If you see the pay commission, which may come anywhere between 18 to 24 months from here, that has also been typically a good trigger for consumption. And I think overall, if the economy does well, given that monetary easing is happening, that should also help. But yeah, the challenge is more bottom up there because consumer stocks in India tend to be super expensive, actually. So a lot of the staple companies, the discretionary companies are not cheap. So I think sometimes going down the market cap curve helps. There are some consumer companies which are at 1 to 2 times sales, obviously because they've not done well. I think it's good to probably have some exposure to them because if the cycle comes, typically in India, any consumer brand goes back to 3 to 6 times sales. So I think in the large cap names, it is a bit difficult to be very excited, even if you're positive from a top-down perspective, because you get about 1 to 2% free cash flow yield for 60 times. So yeah, I mean, top-down is good, but other way to play it is through auto. But there are some technological challenges, obviously, in 4-wheelers, etc. So I think you'll have to mix and match a bit here.
Manish, I think, your preference for small caps is not restricted only to the consumer stocks because I am reading your note and you believe that there are many industries in the 250th to 500th name in terms of market cap which are offering massive opportunities for investment. Can you throw some light on, what prompted you to look so down the curve, and what are the opportunities in what sectors?
So, so in general, I think there's obviously a lot of choice beyond large and mid cap. Obviously, not very liquid, so finite amount of money can be deployed. But I think it's just that the large caps, given that penetration-driven growth, I think in India is structurally peaking out, to be honest, because our demographics, our penetration of a lot of these products is very high. Like if you see two-wheelers or a lot of other basic stuff, we are probably by volume today among top 1 or 2 markets. And therefore, you can't really bank on, opening new markets and getting growth. In that case, you have to play something which is getting premiumized, where it's becoming a bigger part of customers' wallet. And as I said, then you also need valuation on your side, right? I mean, so for example, I think one of the distressed media companies is a good option value for us. One of the not so well-performing branded apparel players is an option for us, because all these are available at fairly cheap valuations versus a lot of the very large companies.
Okay, so you're betting on some of the non-performing stocks. So one which catches your attention is in media, and the other one is in the branded apparel space. So not going with the winners right now. Manish, since you've been in the markets now for so many decades now, you want to share your thoughts on SEBI barring Jane Street from the market? I mean, how should one go about thinking about this? Are there any implications for capital market plays in India?
Honestly, don't have any strong view on this because being a fundamental investor, it's very difficult to figure out what exactly is happening in the derivative space. So yeah, I'll kind of pass this because I really don't understand how this issue actually is being handled.
Okay. The last time we spoke, you were bullish on financials. I think you were overweight on financial. Does that view still hold? Are you incrementally more positive now, or have you been adding to your stocks? And tell us in your portfolio, which would be the top bets now in the financial space?
So I think financials, I'm quite bullish. I think that's the one of the few spaces where valuations are interesting. Having said that, again, I don't expect very high growth in banks, which are a big part of the financial space. But I think general insurance, life insurance, AMCs, these are interesting spaces. They may also not look cheap now versus 2-3 years back, but at least when you see the market caps, you can say that these market caps are still very low versus what is going to happen in the next 5-10 years. So I do think that financials are one of the most interesting space in the market right now from a risk-reward perspective. So we are, in general, overweight a lot of segments, including banks, but more structurally, I would think AMCs and general insurance and life insurance.
Okay. Got that point. Manish, overall for the market, what's the sense? Would you be expecting a bigger move in the second half of the year, or do you think this is pretty much it and now it just boils down to individual stocks and earnings? But are you optimistic on a big earnings recovery and a major push through in terms of flows, etc.?
Not clear on very high GDP growth coming through, but I think the macro is too good, the micro is too challenging. So I think what I mean by micro being too challenging is there is obviously not very broad-based earning acceleration, and a lot of stocks are expensive. There's a lot of supply. So in spite of macro being super attractive to my mind, I mean, the currency looks solid. Inflation, current account deficit looks solid. The top 2 economies in the world are very difficult to invest in. I think the US government debt is going to become a big issue. So there'll be money flowing out of the dollar, I would think, on a medium-term basis. So the macro looks super positive, but the challenge is just the micro in terms of getting stocks at reasonable valuation where there's not too much of competition coming, where there's not too much of supply coming. So I do think that between this tug of war of macro and micro, you probably get a flattish market, and hopefully if you are able to choose the stocks right, so it's a very peaceful environment for stock picking because nothing is moving up too fast. So you don't want markets to be very volatile. So it's a good market, I think. It may not be very exciting, but it's going to be interesting market, I think.
Where do you stand on the global-facing names? Because domestic macros, you said, are great, but domestic micros from a stock standpoint, not particularly good. On the other hand, global macros, very uncertain. But from a stock-specific standpoint, IT stocks or stocks which are, having some sort of global exposure have been suppressed because of this uncertainty in global markets. Do you think they'll come back at some point?
Very difficult to be excited about global sectors. I guess the biggest issue today is, as I said, the US government debt. Whatever way you cut the numbers, it's a very difficult issue to resolve. And I think what probably global markets are building in, because when you see most of the markets are at all-time high, that the end game is quite likely going to be that US will run negative real rates and Fed will print money, because otherwise the demand supply of US bond doesn't resolve very easily. I think that is, to my mind, driving gold, Bitcoin, equities, everything. And from that perspective, maybe metals is a okay contra trade, not a very high conviction thing, but if eventually QE has to start, or whatever form Fed takes to support the US bond market, a lot of the metal names, the commodity prices are not very high. The stocks are cheap on a free cash flow yield basis. But overall, it's going to be very difficult to figure out how this thing resolves. But yes, the more benign interpretation is it will force not only US, I'm talking of most of the developed worlds, that, and Japan's been doing this for years now. And so if you see, Japan incidentally has same inflation as India, but the 10-year yield is 1%. So the point is, eventually, if this leads to globally negative real rates coming, I think that prospect, I think, is keeping most asset prices high.
Okay, lots to think about as we look at some of these global macros and how they play out. And of course, lots to track here in India in terms of earnings and what really is hitting the mark. Manish, great conversation this morning. Thank you very much for joining in. We look forward to connecting again soon. Well, by the way, before we move to our next corporate conversation, the market for a bit dipped into red. Now it's flattened out, but it's absolutely quiet. So none of the Wall Street enthusiasm has rubbed off. And we've been, in this zone, in this block of around 25,400 now for the better part of the last at least two sessions, including this morning. So let's look at that. As flat can be, 0.00% on the Nifty. Well, so let's move our focus then to corporate conversations. The next company on our radar is JSW Infra. News reports are suggesting that the company is all set to win a big order, almost 832 crores. This is for mechanizing two berths at the Netaji Subhash dock at the Kolkata port. Let's talk about this and the overall roadmap and growth plans for the company. Lalit Singhvi, Whole-time Director and Chief Financial Officer at JSW Infra, is with us. Mr. Singhvi, thank you for joining in. Can you confirm, whether indeed you have got this particular contract? And if so, how does it make business sense for you? What will it add in terms of revenue visibility over how much time? I think you're on mute, sir. If you can unmute yourself.
Thank you, Shirvi, and for having me on your show. So regarding this Kolkata thing, we have yet to hear from the Port Trust, officially. So once we come to know, then we can talk more in detail. Bids were invited, and so final decision, official communication or LOI is yet to receive.
Understand, sir, that's... Yeah, exactly. I understand. So you can't exactly confirm till you hear it from the Port Authority.
Yes.
But you were going to, I think, construct and mechanize. It was 2 separate berths at this particular facility.
Absolutely.
And from what we know from reports is that yours was the highest bid price of 4,678 per TEU. So tell us, why were you interested? I mean, why are you interested in being a part of this project? Why are you interested in this asset? And again, my same question. How does it help you in terms of revenue visibility? How long is the gestation period for a project like this? When does the money flow in?
So generally, if you see that we have been very active on acquiring the terminals at the major ports. We are the largest concession holder in India, having 9 concessions already with us. And we keep participating to acquire these terminals, and this makes a very good business sense for us. So if you see our cargo profile, we are 50% revenue comes from the private ports and 50% almost comes from the terminal side, which we acquired.
With this project?
This has a capacity of, say, 450,000 TEUs, and they are already running at 90% capacity utilization. So there is there is no dearth of cargo. So they cater to the east side, and Kolkata is the main market for this. So we don't foresee, and we will run it more efficiently. There are no night operations type of things, and we will try to do and optimize after putting up a good cranes and whatever the mechanization we need to do. So after this will further, their operational efficiency will increase and give them more cargo.
Okay. So if you do win this, how will you fund it? And, it's a good asset, as you said. What would be the peak revenue that you would expect from this, and what would it do to your overall volumes? You would have done the math.
No, that is, this particular thing, as we said, that 90% utilization is already there. So we don't foresee, and the funding of this, for 800 crore project is not an issue. We are having a very strong balance sheet sitting on the cash. So that is not a problem at all for us. So point is to diversify our cargo profile and revenue, and this thing will not be an issue, as per the market prices, we will be able to charge this, and if we run it more efficiently, we are able to increase our revenues from what the current, at prices it is being run. And secondly, one more berth will in future will come from the Kolkata dock, which is likely to come very near. So we will be looking at those opportunities also, so that we have a good presence over there in the Kolkata port.
Can you explain to us this rationale of nearly 4,700 rupees per TEU as a royalty? How does that compare with all the other ports out there? What is the freight rate per TEU for you to be able to give that sort of royalty?
See, this all, in the beginning when we acquire anything, whether we acquired in JNPT and all that, everything in the beginning looks, that it is, royalties on the higher side. But if we run it efficiently and ramp up the capacities, so then, the numbers and efficiency and returns profile comes. On the face of it, if it comes, then everybody will bid for that. So that
what I'm trying to understand is how does this compare with royalty which is paid to other parts of the country?
No. So if you look at whether Tina Tukra or whatever has happened in Kandla or Mumbai, all were on much higher than this also. So that's not an issue. So issue is, you must have a cargo visibility. So that we have a good sense of the cargo visibility in that region.
What is the visibility that you have? I mean, how many TEUs do you think you can move here?
No, we can do much better than the capacity also. That is, capacity is 450 by doing various optimization, by starting night operations, putting up a better cranes. So the cargo is no doubt there.
Okay.
So can you help us understand what we're trying to ask is that, say today if JSW Infra is doing X amount of volume, if you get this facility and by the time these two berths come up, it could be how much? You know, X plus 20%, X plus. We're just trying to understand over what time frame.
They grow.
Yeah.
If you look at JSW Infra, we have 9 terminals and we got 3 private ports. From 177 million tons, we are taking it to 400,000 tons.
Correct.
So, in that scheme of things, you know, as a percentage increase, is not a very large percentage increase. But likewise, every year, you know, some capacity will keep coming in and we plan to add it. So, if you look at, say, 500,000 TUs would be what, 7 million tons of, say, in terms of tonnage of the cargo, if you take, you know, around 14 ton a TU as a thumb rule. So, you know, if I am already doing 117 million tons, so it is a 7 million ton. So,
Got it.
The point is not that. Point is that every year such assets we keep acquiring and we make a full chain of these terminals, which gives us more, efficiency and EBITDAs and the revenues.
Can you give us a sense of what sort of revenue you are looking at on account of, this for FY26? Because you had earlier given a guidance of 720 crores in your logistics business with 15% margins.
See, these exact details we can talk during the Q1. By the time, hopefully, this will, whatever till official announcement comes, it will be too early to talk all these numbers and detailings. So we must get it first, which we have not yet got it. So this is, we can talk at the appropriate time.
Sure. Thank you, sir, for joining in. That's the word from JSW Infrastructure. Markets are flat. The Nifty is below 25,400, a minor cut of 23 points. HDFC Bank is in focus. That's the heavyweight, which reported the Q1 business update. Gaurav is here to revisit the numbers for us. Gaurav?
Well, yes, HDFC Bank came up with their Q1 updates, and it looks like good set of numbers is what the bank has reported. When we look at advances, they have increased almost by 6.7% on a year-on-year basis, while deposit growth has been strong at around 16% on a year-on-year basis, and it also implies a strong growth on a sequential basis as well. Deposit growth, let's not forget, this was driven by the term deposits, and as a result, when we look at the CASA ratio, and implied CASA ratio comes at around 33.9%, which is again in line with what the street is expecting. Now, let's not forget that bank had said that they will be bringing down their CD ratio in the range of 85 to 90% in a gradual way. And if we look at the advances and deposits in this quarter, the CD ratio comes at around 96%. That again shows that the bank is actually moving towards what they had guided earlier. Another key point to highlight is that they also had mentioned that they are going to grow their loan book in line with the system. Now, Q1 loan book growth is usually weak, and it seems that the bank is picking up at the pace of system, given that 6.7% growth on a year-on-year basis for Q1, and at the same time, average loan under management also grew at 8.3%. So definitely, good set of number is what we can see for now. We will be watchful on how the NIMs are going to be, but for now, good set of numbers from HDFC Bank.
Got that. Thank you very much for that. Let's invite the next corporate now on Bazaar. We've got BLS International joining in to talk about the quarter gone by. Looking ahead, Shikhar Agarwal, Joint Managing Director at the company, is now with us on the show. Shikhar, thank you for joining in. This is Rima here. Now, the quarter gone by had multiple geopolitical flashpoints, whether it's the India-Pakistan or the tensions in Middle East. Flights were getting rerouted. Then you had that Air India the fateful crash there. Was Q1 softer than expected on the back of these developments? Is it tracking lower than what you were earlier anticipating? And what was the impact on the whole?
See, if you see our last year numbers, we've done a 70% growth compared to last year. We did a 540 crores of PAT compared to around 300 crores last year. If you talk about Q1, these geopolitical risks keep on happening from the inception of the company. There was a war in the Middle East, etc. But we have not seen any impact on our numbers. The demand for tourism continues to be strong globally. There is short-term impact, but on a long-term basis, we have not seen any impact. So our numbers remain strong.
So there was a short-term impact, though, in Q1.
I mean, definitely, at the time of war, the stoppage of flights happen in some certain jurisdictions, but then it is also, compensated by increase in travel in other jurisdictions. So definitely on an overall basis, if you see, we have not seen any big impact.
Right. If you could give us a sense on the applications that you processed this quarter, what's your target for this year? And what proportion of those applications would be in the value-added space, or rather the premium space?
See, if you talk about last year, we processed around 4 million applications. It was a big growth compared to the year before. We also had consolidation of our acquisition opportunities like iData and Citizenship Invest. So 20% of the revenue even flew in from that. The first quarter numbers will be out soon. So definitely we will be sharing the numbers when the results are out.
This year, what are you targeting in terms of applications? 4 million last year. How much do you think can you do this year?
See, next 5 years now, what we have seen is, if you see the last 5-year trajectory, we have grown 70% CAGR. As a company, as the base becomes bigger, our objective is to maintain the EBITDA margins and the growth momentum. Our target is, if in the next 5 years, if we can do 25% plus growth year on year, I think we can really increase the size and the base of the company. So definitely that is the target, in terms of volume, in terms of revenue, etc.
You think 25% CAGR revenue growth over the next 5 years is possible without acquisitions on a pure organic basis?
See, definitely, if you see the opportunities that are throwing in the market, there are billions of dollars of contracts that are up for renewal. We as a company now have global market share of 17%. The industry is growing 14% annually. It is poised to become a $4 billion industry in the next 2 years. So definitely, if you see all these factors, new governments are outsourcing new services, new territories, etc. So our market share increasing, new governments outsourcing, we definitely feel that we can continue the growth trajectory.
Your market share globally is 17%. And what would be VFS's market share? And how has the market share changed in the last 5 years?
See, when we started, 10 years back, starting getting into the foreign government space, we had only the market share of 5 to 7%. Over the years, it has grown to 17%. Definitely, our competitors, which are backed by private equity, will have bigger market share. But what I know is our market share is around 17%, and we feel both the industry is growing, the outsourcing market is growing, and the visa volume is also growing. So our market share is also poised to grow in the next few years.
What we understand is that VFS or some of these operators might be looking at an IPO in the Indian market as well. Currently, the only play in this travel and visa space is BLS International. The scarcity premium goes away. So to that extent, for those who are looking at your numbers and then VFS's numbers, what is the your pitch to investors who would be looking at BLS then, saying, because VFS obviously is a lot bigger?
I feel that this is a big advantage for us. More players getting listed in the Indian market is a testament for, we have been listed from 2017. We have been saying that the Indian market is really good. And I feel more industry data coming in, more players coming in, more research on the industry, more awareness about the industry will actually lead to a growth in the industry, growth in the visibility on the industry, growth in the market as a general, more investors coming into the industry. So definitely we feel it is a big benefit for us. Right now, we are the only listed player in this segment globally. So more companies getting listed will definitely add on, I feel, to our valuations, to our numbers, to the insight into the company.
And how many contracts of yours come up for renewal this year, and how many new markets are you looking to bid for this year?
See, most of our contracts in the last 2 years we have renewed. So 90% of our revenue is intact. We have a clear visibility of at least 5 to 7 years. But there are multiple contracts that are coming up for renewal of the competition. If you talk about billions of dollars of tenders are coming up for renewal, there are newer governments that are also considering outsourcing, first-time outsourcing. So definitely there's a big opportunity pie in front of us. Even if you see the acquisitions that we did last year, only some months of the revenue had come in. The full year revenue will start coming in from this year. So definitely there's a big leeway for us going forward. And these new players, the other players getting listed will add more visibility to the industry.
Any new white spaces you're targeting in your business housed under BLS International? One, of course, is to go deeper, wider in the existing visa business. New contracts are coming up. Many first-time governments are outsourcing their visa processing. But any new white spaces in the next 5 years that you're contemplating?
See, if you see the acquisitions that we did last year, we wanted to get into, long-term visa space. That is why we acquired this company, Citizenship Invest, which is working globally with multiple nationals, facilitating second passports, residencies, etc. So definitely that was more aligned to our government service business. Going forward, if there are businesses wherein there is government outsourcing globally, user pay model, negative working capital, etc., we will be very inclined to look at those businesses. But as of now, we see a big opportunity in the visa outsourcing space. So that is what we are focused on.
Right. And margins, you said you are looking to maintain. Are you looking at around 30% from here on? 25% revenue CAGR, you've given us the numbers. Margins, what is your aspiration?
see, if you see our margins have grown from 21% to 28% and now 34% in the visa business. So there has been a constant increase in margins. We've been doing efforts for the last 5 years. Now with the, increased base, we are a 540 crore profit company. Our immediate target is to maintain the margins even on the increased base. But overall, we are continuously focusing on technological efficiency, cost efficiency, increased revenue. So definitely our immediate and long-term target is to maintain the margins. And then if there's an increase in margin, it will be more long-term.
All right, we take that point. Thank you so much, Shikhar, for joining in. Always a pleasure speaking with you. In fact, we're done with this conversation, but not done with the travel and tourism space itself. Take a short break. On the other side, Rajiv Kale of Thomas Cook joins in to discuss the summer demand trends and their FY26 outlook as well. Stay with us.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by Century Ply Club Prime, Raho Befikar. And National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar.
Hey, why are so many lights on? Is it Navroz?
Settling accounts, uncle?
No, writing a love letter. Check your accounts every day and ensure there is no mismatch. Exchange sends trade-related messages daily. Do timely verification. And if there is a mismatch, inform the exchange immediately.
Soch kar, samajh kar, invest kar.
Aim to transcend growth effortlessly. Wonder which market cap to invest in. These funds aim to blend asset classes for growth. Motilal Oswal Large and Mid Cap Fund. Motilal Oswal Multi-Cap Fund. Motilal Oswal Flexi Cap Fund. Think equity, think Motilal Oswal. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ.
Even as the markets have flattened out, the broader markets have picked pace once again. So Bosch, for instance, has moved to the high point of trade. We are seeing some traction in IGL, Mahanagar Gas, so some of these city gas distributors doing well. And Godrej Properties too has moved to the high point of trade. So if you look at the advanced decline from what it was, say, about 20 minutes ago, we have seen an improvement, a marked improvement, with around 1,600 stocks advancing for 800 stocks, which are declining right now. That number was a lot lower just as we started trade. But let's talk about the travel and tourism space itself. The management of Thomas Cook India now joins in on what summer has been for them, but more importantly, how FY26 is panning out. Rajiv Kale, who's the president and country head, holidays and MICE visa services, a whole host of travel services that they provide, joins us now. Thanks a lot, Rajiv, for joining in. How has summer been? Let's start with that, because there was unseasonal rains. There were a lot of these, geopolitical issues. In domestic tourism itself, we had the India-Pakistan skirmish that happened. So to sum all of that together, how was summer 2025 so far?
Good morning. Thank you for having me. Summer 2025, I think we saw a little bit of a blip towards the end of the summer. I think what we look at is, our acquisition for Q2, which is April, May, and June, was fairly good from the acquisition point of view. So we didn't see a very big impact as such on this quarter. The acquisition was obviously slow for July, August, and September, which is the next quarter. But we are very confident that we have taken some aggressive steps to kind of restore the confidence of the travelers, the customer, to keep traveling, and we will get the demand back.
So what did Q1 report in terms of revenue growth according to you, and what's your outlook for this entire year?
So we look at the calendar year. So for us, the Q1 is basically the Jan, Feb, March, which was fantastic. We were ahead of the target. Q2 also is, looking good. We still have some, numbers to kind of conclude. So on the whole, this year is looking good, and we will be on our target or ahead of our target.
What is that target be?
So we are looking at growth of between 12 to 15%, and we should be there on that growth trajectory.
Can you give us a breakup of that growth as well between your several segments, travel, and there is corporate services. So this 15% growth that you're speaking about.
I'm talking about the travel business.
Only the travel business. Yeah. Okay, so within travel, can you give us a mix between domestic, outbound, long haul, short haul?
So largely we are, long haul and short haul where the growth comes from. Consolidatedly, I can talk about the number because we actually consolidate those numbers from long haul, short haul, domestic, and then we have corporate travel, and then we have MICE. So these are the three large units that we look at from the overall travel as a whole spectrum is concerned.
So all put together, you're saying everything put together should grow at
the leisure 15. We are looking at the growth of 15%, 12 to 15%.
Okay. And corporate travel?
Corporate travel, very difficult to comment at this point of time from the year number point of view. So as the case with MICE, which is meetings, incentives, and conference, I think we will have to see how the demand comes in for the coming quarter, and but I think the pipeline is looking very good.
Okay, you've got a cash of more than 2,000 crore on your books. What's the plan? At least in the second half of the year, are you planning to deploy?
You talked about the cash.
Yes, cash on your books. What is the number now, and what are the plans with respect to deployment?
See, we have some plans as far as the expansion of business is concerned. We will look at the AI space is something which is very important, and we have already invested in that. And there are other growth plans are there, which we will talk about it to the market as it comes through.
All right, you're looking to invest in AI. Speaking about AI, you have the digital photo vertical, which has actually been an underperformer in the previous quarter. If you look at the numbers, there has been a decline in revenue. There has been a decline in profitability as well. At a time when everyone has a phone and
DIE is a completely different division, and I will have their managing director talking about that specifically. That is much better.
Rajiv, just to go back to that point on corporate travel and MICE, your meetings and corporate event segment.
Yeah.
You're saying it's looking good, but you're refraining from putting any sort of numbers to how much that business will grow. Is there a concern? I mean, are corporates cutting back? Didn't quite get a clear picture on the corporate side. So and how much does it contribute? How much are you projecting leisure travel will be, and how much will corporate and MICE be?
So I'll talk about the corporate MICE because that is my area. I'm the head of MICE. Yeah. When I'm looking at MICE, if I have to compare it with last year, I'm very confident that we will have a growth of 12%. We are also heavily involved into the government business, which is the Sports Authority of India. We are impaneled on SAI. So we did a large event, in the first quarter, which was the National Games, which was held in Uttarakhand. And government is looking at expanding their portfolio from the Sports Authority of India point of view. There are various Khelo Indias and National Games are coming up. So that is definitely going to help us because when we are looking at MICE, we just don't look at the corporate. We have exhibitions, we have sports authorities, events.
What proportion of your revenue comes in from the government? What proportion of your revenue comes in from the government?
Approximately 10 to 15%.
All right, we take that point. Thank you so much for joining in and giving us an outlook. 12 to 15% growth in your travel services vertical is what you're guiding for this year, led by at least 12% growth in MICE, and you have the government, which accounts for about 10 to 15% of your sales. You believe that, with Sports Authority of India and some more events taking place, this year looks good. Notwithstanding the weakness that we've seen in the previous quarter, you believe that the forward bookings are strong. The street likes what you've said, and we've seen a bit of an uptick in the stock price from the time that you came. The street is betting on these themes. It's up around 4% for Thomas Cook. Let's welcome Mitesh Thakkar back on the show. Mitesh, your trade at 10, what would you have?
I think markets have reversed from slight negative for opening, and the 25,400 still hasn't been taken out decisively. So on the index, I'm waiting, in case we start going below that, we might get a 200 point kind of a decline. Hence, it will be a 200 point kind of range on the upside, 25,400 to about 25,650. On the stock side, Lupin is a buy for me. Buy here with a stop at about 1950. Look for targets of around 2025 to begin with, and then maybe even more. And the second stock is on the negative side. Persistent System, I would want to sell if it starts breaking below 59.10, 59.15. So sell below 59.10 with a stop at about 59.60 and look for targets of around 5,800.
Just wanted an update on your 9-10 call on BSE, because the stocks opened sharply lower. Do you think it makes sense to stick on the long side for BSE, or maybe stay away?
In fact, with the gap down Mangalam, there was no long position initiated because it opened below the, so nothing was initiated. Just that maybe a news flow which kind of negated the charts.
All right, take that point. Thank you so much for joining in, Mitesh. With that, we'll take a short break. On the other side.
Before we take a break, we've got some fresh updates from the US president. So just point this out. So the most important point is he's saying that countries will start paying tariffs on the 1st of August. So it's not like 9th of July or 10th of July, suddenly these tariffs come into effect. But he's giving mixed signals. He's saying that the value of tariffs could range from anywhere from 10% going all the way to 70%.
Which is exactly why I did not allude to that even as I was reading this. Because, Donald Trump says countries will start paying it from 1st August. They will start sending tariff letters to countries starting Friday. Which countries? We don't know.
Correct.
How many letters? We don't know. What would be the... So, after reading this out as well, we'd be none the wiser until Donald Trump says something again. And even after that, we'll be none the wiser.
Sometimes you have to read between the lines, Mangalam. And if you read between the lines, then the sense is that there is still posturing going on. The sense is that negotiations are still underway. He's saying he'll start sending out letters to some countries over this weekend. But there's no immediate tariff levy from the 9th or the 10th of July. So I think this is still a little bit of, maybe brinksmanship, negotiating tactics, call it what you want. A little bit of that's still going on. That's the latest on tariffs from the US president. We'll come back on the other side and then turn our attention full throttle to the commodities market. Back in a moment.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो, और फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना? ये सब एक ही नाम की बात कर रहे हैं और वो नाम है पीएनबी। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए पीएनबी लेकर आया है एमएसएमई लोन स्कीम्स जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है पीएनबी, वो भी बिना किसी झंझट। जट से पीएनबी का भरोसा, अब हर व्यापार होगा बड़ा।
Travel Food Services Limited launches an international public offer of equity share of face value of ₹1 each in the price band of ₹1,045 to ₹1,100 per equity share. Bid offer opens on Monday, July 7th, 2025, closes on Wednesday, July 9th, 2025. For risk factors and other details, please refer to the RHP available on the websites of the SEBI, the stock exchanges, BRLM and the company.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
लखनऊ के लिए जाने वाली अवध एक्सप्रेस प्लेटफॉर्म नंबर 2 पर आएगी। गोवा के लिए स्टार क्रूज प्लेटफॉर्म नंबर 2 से ही जाएगा।
ये सब आपको एक प्लेटफॉर्म पर मिले ना मिले, पर शेयर इंडिया प्लेटफॉर्म पे आपको इक्विटीज, डेरिवेटिव्स, कमोडिटीज, इंश्योरेंस, म्यूचुअल फंड्स और एल्गो ट्रेडिंग एक साथ मिलेगी। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Okay, that index should come up for you on your screen absolutely unchanged. We're talking about 0.00%. Individual stocks are flying around, but we'll get to that in a bit. For now, it's over to Manisha for the entire lowdown on the commodity markets. Manisha.
Thank you for that, Reema. I'm looking at iron ore prices. Within the metal sector, we have been seeing all of those metals actually continue to do well, ferrous and non-ferrous. But the iron ore prices clearly have been gaining for a second straight week. In this week now, we are up by 2%. For the year so far, we still are in the negative by 7%. One of the underperformers, really, when you look at metal as a sector. But three of the major top lines really come in from China in sense of support for iron ore. One is the industrial output capacity, where China is looking to reduce that. The other is about China supporting its struggling steel industry that could lead to more demand for iron ore going forward. And then China also is supporting its struggling steel industry, its housing industry as well. And the markets believe that China's stimulus could drive construction recovery to support iron ore prices going forward there. The other thing is about resolution by the way of tariff trade agreements that could also stabilize prices. The markets are looking at US making trade agreements with various countries, and that in turn has been supportive for metal demand, industrial demand, and in turn for metal prices there. The other thing also is about the shipments in sense of supplies. Australia, Brazil, we've seen shipments on a decline. These are the major producers of iron ore, and we've seen decline in the last couple of months on an FY25 basis as well, and that markets see as supportive. And then the major miners like Rio Tinto, BHP, Fortesque will have reported lower exports on a month-on-month basis for the month of June. That's yet another factor which is leading support to the markets there. If you look at the Indian markets, then we're looking at better production. If you look at 2024 for the 2 months here, we're looking at 53 million tons versus 52.7. It's a 0.6% of a gain, but gain nonetheless. And when you look at the year-on-year production when it comes to iron ore, we saw record numbers for the FY 2025 at around 289 million tons, which was at around 277 million tons in the last year. The final plate shows you on what is the outlook for iron ore prices going forward, and most global banks and brokerages believe that you could be looking at a higher number going ahead. BMI and UBS talk about $100 a ton, and then you have ING, AOC talking about 80 to 95. Goldman Sachs also says $95 a ton is a possibility for the iron ore prices going ahead. Okay, all right. Manisha, got it. Thank you very much for that. That's the latest from the commodity markets. But the latest in the equity market is that the Nifty is still struggling. It's down about 1% or so, absolutely flat. And Trent is still down 7%. Mangalam?
Well, now from what we spoke about earlier to now, the only difference is that the company has officially updated the exchanges on the first quarter numbers. Yesterday, they said that it would be 20-ish% sort of growth in the first quarter in the annual general meeting to analysts, basis which the analysts came out with their notes. But now the number is on the exchanges. 20% is the exact revenue growth that the company has reported on a standalone basis. 5,061 crores. They've added one West Side store. They've added 11 Zudio stores in the first quarter. Remember, a large part of the Zudio store additions happened in the second half of the previous year. So the street believes that maybe, they will start catching up when it comes to same-store sales growth in the last part of this year as well as these stores anniversarize. But 35% is the CAGR that the company has reported over the last 5 years. 25% just a couple of weeks ago management said could be sustainable, and in that a 20% growth is something that the street definitely did not like, especially after a 30% rally from the lows on the stock itself. So on the back of which brokerages have cut their estimates basis the first quarter performance. FY26 revenue is being cut by 5% and FY27 by 6% by Nuvama, and as a result of which they've cut their EBITDA estimates by about 9 to 12% too. and they've downgraded the stock from buy to hold, and they've cut the target price from 6,600 rupees to 58.84, marginally above the current market price, but still, it's a hold.
And in this stock market or stock exchange update, they've not given any other reason. And I'm just trying to think if there could be an aberration, whether they have a lot of their stores. I'm not sure. I mean, for instance, in the western northern states, because of the skirmish, I'm just, completely talking out of my hat, but just trying to figure whether this could be an aberration quarter or whether this is.
If it was, the company would have given it, but the update is largely, pretty fact-based, and that's why we're seeing the reaction. Had it been any reason that the company would have given, etc., maybe the stock would have seen a recovery from the lows, etc. But in any case, your FY26 estimates now stand downgraded, whatever be the reason.
Indeed, thank you very much for that. Well, with that, it's time for a short break. On the other side is our special segment. It's the economy. Lata analyzes Credit Bureau CRIF's report on how India lends. With Sachin Seth, the author of the report, CRIF India and South Asia, and Madhusudan Ekambaram of Credit B Financial Services, Kanika Pasricha of Union Bank of India, and Sudipta Roy of L&T Finance.
Travel Food Services Limited launches an international public offer of equity share of face value of 1 rupee each in the price band of 1,045 rupees to 1,100 rupees per equity share. Bid offer opens on Monday, July 7th, 2025, closes on Wednesday, July 9th, 2025. For risk factors and other details, please refer to the RHP available on the websites of the SEBI, the stock exchanges, BRLM and the company.
कैश कम है, विड्रॉ करना पड़ेगा।
ट्राई SBI डोरस्टेप बैंकिंग, कन्वीनियंट है।
बैंक आएगा, करेगा कैश डिलीवर, टिक। TDS सर्टिफिकेट, टिक टिक। अकाउंट स्टेटमेंट, टिक टिक टिक। हैट्रिक। सबको पता है।
SBI डोरस्टेप बैंकिंग कन्वीनियंट है, सबको पता है।
वेलकम दादा। वाह। अरे भाई, ब्रेकफास्ट मिलेगा?
हाँ जी।
हीटर।
हाँ जी।
तो अब क्या सूरज लाओगे?
जहाँ सूरज वहाँ रोशनी, और जहाँ विक्रम सोलर वहाँ खुशियों वाली सनशाइन।
Meta Infotech Limited, cybersecurity solutions provider with domain experience of over 15 years in the industry, launches its IPO on the BSE SME platform with a price band of rupees 153 to 161 per equity share. IPO opens on 4th of July and closes on 8th of July. Book running lead manager Hem Securities Limited.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
सर, नो ट्रैक्स।
Class partition systems by Ozone makes the world go.
Crizac Limited launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 233 rupees to 245 rupees per equity share. Bid offer opens on Wednesday, July 2, 2025, closes on Friday, July 4, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome to It's the Economy. Today we discuss how India lends, a report prepared by credit bureau company CRIF. They have aggregated a mountain of data on loans lent by all institutions, private banks, public sector banks, NBFCs, MFIs, and they come out with an interesting set of trends visible in terms of lender behavior and borrower behavior. The report should be useful to lenders themselves, to the regulator, more so to investors, viewers, to understand where is the loan growth and where is the pain. Joining me on the show are the author of the report, Sachin Seth, who also is the head of CRIF, Sudipta Roy, Managing Director and CEO of L&T Finance, Kanika Pasricha, Chief Economist, Union Bank, and Madhusudan Ekambaram, Founder and CEO of Credit B. Well, gentlemen and Kanika, thank you very much for joining us. Welcome to the show. Sachin, let me start with you. Can you begin by telling us the key things, anything surprising that you noticed in terms of trends?
Thanks, Lata. So first of all, Lata, every time we release this report annually, I mean, there are a lot of things which comes completely, surprising. So this time I'll say there are 3 or 4 points. First of all, this microfinance, the issue, or let's say the stress which has been there, I think it has lasted much longer than anybody expected. I think every quarter, everybody has been tracking, and we hope that, it should, we should recover from that. But I think it has lasted much longer. We are seeing some signs of improvement now, I think, as that we saw the data last month. But that's one thing which was surprised all of us. Second is that if you see the share gain by public sector banks and even NBFCs in many of the segments over private sector banks, that has been a big surprise, because there has been a stronghold of private sector banks in many of the segments, including home loans, including other segments, credit cards, personal loans, etc. That has been a very, very eye-opening thing, which means that there are systemic change happening in the industry. So that's a new thing. Third thing, that the amount of focus and thrust being given by government and multiple ecosystem partners on MSME, we were hoping that there could be a lot more adoption. But I think there has been changes, or there have been improvements, but I think it's still a lot more to be done there.
Work in progress.
Work in progress, yeah. And I would say on another segment, consumer durable segments or other personal loan segments, I think still we see that it's continued to be dominated by 3 or 4 players, primarily NBFC players, which is very, very different compared to other industries. So there are only 1 or 2 banks players, and NBFCs are doing far better there. So that continue to be there. So I would say, sum and substance, these are the 4 things. Everybody else, and I would
let me ask if Sudipto agrees with you. Sudipto, anything, I mean, you've been a veteran player. Anything surprised you, shocked you in the findings of the trends in FY25?
My answer will be provocative, actually, and nothing shocked me.
Okay.
So in the sense that, okay, maybe, the pace of slowdown in some places have been a little more than what I estimated for. So if you say that is something which I found probably a little more than my expectations. But the fact is that if you see, last year was a tough year, actually. From an asset quality point of view, last year was a tough year. And most of the lenders, right, they took up their sort of credit guardrails. And coupled on top of it, if you see from around from the latter part of 2023, the Reserve Bank of India also started upping its ante on sort of curbing the runaway growth in unsecured loans as well, right? A variety of actions. Now, when the regulator is also pushing you to sort of temper your growth charge, as well as when you have risk rising on the margin, which obviously the private sector banks with very large unsecured portfolios, credit cards and personal loans portfolios go for the first time, always, and then we saw the microfinance sort of asset quality issues start bubbling in the front from the April of last year. Overall, there was a sort of a realization in the industry that, probably, the fraud, as we call it, on top of the lending ecosystem had built to a certain extent that there was a slowdown needed.
That point is taken, Sudipto. What surprised me is not that the unsecured loans fell, because the Deputy Governor Swaminathan was telling us in the press conferences that 30% growth is not like, I mean, when nominal GDP is growing by 10%, you can't have a 30% growth in unsecured loans. But I was more surprised by MSME originations falling. It was a good year of growth, a decent year of growth, FY25. That surprised you?
No, it didn't surprise me, because what I have to understand that everything is connected, and MSME also takes unsecured loans. So the fact is that, when you have one part of the sort of ecosystem exhibiting risk, which is in credit cards, and many of the MSME, especially on their personal or the individual capacity, also borrow from the market. And the fact is that when you underwrite an MSME loan, you not only underwrite their business, you also underwrite them personally. And when you see that their personal borrowing facilities are showing signs of stress, the guardrails also go up in the MSME lending.
Fair enough.
Right? So
okay, point taken.
I think the risk perception of the industry went up, which led to increased sort of credit guardrails across all segments, which led to a sort of secular degrowth in lending in all segments.
Okay, got it. I'm sorry if I'm hurrying you all because it's such a rich report. I'm trying to get, some analysis on everything. The other thing that, which I want the economist to comment from Union Bank, Kanika. Kanika, it says, the report says small ticket loans saw slower uptake and higher delinquency pressures. Whereas the borrowers seem to have gravitated towards higher ticket loans. Is this saying about K-shaped recovery? What does this say?
So, Lata, first of all, thanks for having me here. It's such an esteemed panel. You're absolutely right. It is the high-ticket loans that are gaining momentum. And I'll actually connect with what Sachin talked about. The reason why private sector banks were not growing as much as public sector banks, one of the key areas is home loans. And in home loans, what we found is that private sector banks' growth is less than 5%. If I look at RBI data, I'm not quoting from How India Lends report, while public sector banks' home loan growth is around 12 to 15%. While the number of accounts growth is falling in both segments. But it's the ticket size of loans that's rising in public sector banks because private sector banks, as the cycle started to shift towards easing, they didn't want to get into EBLR-linked loans. And in fact, there's such competition in home loan market that the interest rate bucket for 9 to 11%, which had 65% share in FY23, fell to only 40% in FY25. It all shifted to 7 to 9. So private sector banks were not willing to lend there. So ticket size of the loans has shifted from private sector to public sector. And that too, we've seen it's the higher ticket size loans as part of K-shaped recovery that are growing more, while the smaller ticket size is struggling. So you're absolutely right. It's the shift in wealth effect. It's a shift in the income pyramid as well. And it's the bottom of the pyramid that's still struggling on inflation, while the upper end is relatively comfortable.
Madhu, to get you into this personal loan thing, Sachin's report says early stage stress showed improvement. Now, does this mean that we are in an improving cycle of bad loans because early stage defaults are declining?
Yeah, see, I think before getting into the report itself, let me talk a little bit about what we saw in the industry as such, right? So, if you take Q1 of FY25, which was last year, somewhere in that April, May, June quarter, everyone saw the stress in the unsecured lending space. It could be either the short-term personal loan, long-term personal loan, or even the microfinance started showing certain stress. Now, it all depended on when each of the companies' stress kind of peaked. When did the risk peak, right? So, most of the NBFCs, when we see that, it peaked by Q2 and in the results we could see that, or in Q3, somewhere the risk was peaking and after that it was always improving. But the stress continued somewhere in the microfinance segment, and people say that it's yet to be seen. The peak risk is yet to come out and whatnot, but that is where it has continued as a higher risk within the personal loan segment. Now, specifically coming to, let's say, the fintech segments where we operate, I think what we saw was that the Q2 where the risk actually peaked, and after that it has been in a very much of a improving trends is, or the declining trends is what we have seen, and that's how the industry benchmarks are also showing. Something from the report what I have seen is that while a lot has been talked about, there has been a risk that is in build up in the short-term personal loan or the small ticket personal loan. But if we go a little bit deeper and then look at it, less than 1 lakh rupee, the risk has not built up. The risk has built up in like 2 lakh to, let's say, the 10 lakh segment is where we have seen the risk has deteriorated over the time. But less than 1 lakh has always been performing well. That's what the data shows. But however, there has been a lot of narrative both in the media and everywhere else there that anything less than 50,000 or 1 lakh rupee has been more stressful, but that's not the case if we just look at the report data, and that has been a pretty good surprising element for me.
I think an earlier report had said under 50,000, but that was an old report, so maybe things have corrected since. Sachin, would you agree, from what Madhu is saying, will we in FY26 see less stress? And I'll tell you why. The financial stability report that Kanika referred to, that gave the impression, especially for NBFCs, that stress will rise from about 2.9%. They are expecting the baseline to go to 3.3. But you're seeing some signs of early stage delinquency falling. What is your best guess of 26? Will stress be more than 25?
Yeah, I mean, first of all, it's a forward-looking statement, so we always look at the data from Bureau from the past. But yeah, if I say that, you know, whatever we are seeing the signs, and we have also compared it with the last 2 or 3 years in certain situations. So if I stick to the segments what we have assessed, definitely we are seeing that certain corrective actions being taken by lenders. So microfinance, we are working very closely with the industry. We are seeing corrective actions, and we have, in fact, I can tell you what is not in the report. We have even taken the data of April also, and we are seeing that, you know, there is an improvement.
Decline in stress.
Decline is happening. So we are hoping that when we release the report in June, or June end cut data, it will definitely have improvements. So hopefully that would be better. If we look at personal loans, etc., I think a lot of corrective actions have already been taken by every lender, and there is a very cautious approach. So that is being taken care. I think if you talk about certain other segments, I think people are shifting about asset-based lending and more of a secure lending. So there is a lot of talk happening on micro LAP, etc., which are by design a less sort of risky assets. So there's a shift in the industry happening towards that. And even overall lending portfolio, you see the growth which is happening is towards that, right? Gold loan also has been, the highest growth has been in the gold loan.
Yes.
In fact, if you see the portfolio growth, there has been a decline in almost everything except gold loan. And gold loan, RBI has already come out with saying that you need to have even a bureau check there, which most of the people are not doing, right? So with all this keeping in mind, I think the industry ecosystem, the guardrails, the RBI guidelines, the liquidity, the changes which have been done in the allocation for the MFIs, the measures are being taken. I think if you keep the portfolio as it is, I can definitely say that this portfolio will improve. But what definitely happens is that portfolio is never it's a going concern, right? So if I say that NTC customers will come in, certain customers will go through certain other changes in their lifestyle, their earnings, etc. But even the underwriting things are improving. So I would say in substance of this is, I think we will definitely have improvement in the portfolio quality. But yes, there are new lenders coming in the market. They want to gain more market share. They want to have, so there could be always a mixed bag.
Fair point.
But same portfolio, if you keep it, definitely portfolio is going to become better.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ।
एक 12 नंबर पड़ा क्या उधर? कहाँ खोया रहता है भाई? हमेशा मोबाइल में घुसा रहता है। आपकी महबूबा देख रहा हूँ। ये सब क्या है भैया? हाँ? क्या बाइक थी यार? रिंच एकदम हाँ? क्यों नहीं होगी भाई? बाइकर बनने का सपना जो था, फिर ये डुगडुगी गई कहाँ? पापा के साथ साथ सारे सपने भी चले गए। अब तो बस अपने गैराज में बैठा लोगों की डुगडुगी ठीक करता रहता हूँ। और अपने बच्चों के सपनों के साथ ऐसा कुछ नहीं होने देगा। वो कैसे? पहले से लाइफ इंश्योरेंस का टर्म प्लान ले रखा है, ताकि मेरे मोंटू के सपनों पे कोई ब्रेक न लगा सके। बड़े भैया,
सपनों को रखो सुरक्षित टर्म प्लान के साथ। सबसे पहले लाइफ इंश्योरेंस।
कैंट आरओ देता है सबसे प्योर पानी, और कैंट आरओ प्योरिटी दिखाता भी है। खुद ही देख लीजिए। कैंट का सबसे शुद्ध पानी पियो और हेल्दी रहो।
Delivery boy has picked your order.
We know you are hungry. The message notification said it would take 30 minutes.
We can't just rely on a message.
Didn't you sell some shares yesterday?
Yes. So
did you check them?
I got a message.
You can't just rely on one message. If you make any transactions in the stock market, cross-check the SMS or email you receive from the stock exchange with your Demat account as well as bank statement.
Beta, when one's hungry, the brain doesn't function properly.
सोच कर, समझ कर, इन्वेस्ट कर।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
GIFT Limited launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 233 rupees to 245 rupees per equity share. Bid offer opens on Wednesday, July 2, 2025. Closes on Friday, July 4, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Co-powered by SBI, 7 दशक देश के साथ. In association with Think Equity, Think Motilal Oswal. And